Tired of hearing about the same old stocks? While everyone's chasing giants like Apple and Nvidia, some of the most explosive opportunities are hiding in plain sight, trading for less than a cup of coffee. We're talking about penny stocks, companies under $5 a share. Now let's be clear, they're risky, but if you do your homework and find the right ones, the potential for massive returns is undeniable. Today, I'm going to break down 4 penny stocks under $5 that are showing signs of a potential breakout in 2025. These aren't just random picks, they're companies in different sectors, energy, electrification, and biotech, that are fundamentally improving and flying under Wall Street's radar. We're looking for undervalued gems with solid growth stories. So if you're ready to explore some high-upside plays that most investors are overlooking, you've come to the right place. First up is Ring Energy, ticker symbol REI, currently trading around $1.15. This Texas-based oil and gas company is all about efficiency. They operate in the Permian Basin, one of the most resource-rich areas in the US, focusing on low-cost oil fields. What makes them so interesting right now? They recently acquired assets from Limerock, which boosted their daily production to nearly 20,000 barrels of oil equivalent. Crucially, about 2/3 of that is crude oil, which brings in higher profit margins. The numbers speak for themselves. Their free cash flow is up a staggering 250% year over year. They've also been laser-focused on cutting costs, slashing expenses by $400,000 a month, all while increasing their production per share by 13%. They are still managing some debt, and of course the energy sector is always subject to volatile prices. But here's the kicker. Ring Energy is trading below its asset value. If oil prices remain stable or climb, this stock could easily double or even triple. It's a classic example of a low-priced, high-efficiency energy play that's quietly getting its house in order. Next on our list is VAALCO Energy, ticker EGY, trading around $3.90. Unlike Ring Energy, VAALCO is an international player, with its main operations in West Africa, in countries like Gabon and Equatorial Guinea. This isn't some new, untested company. They have a long track record of running efficient and profitable overseas operations. Their ambition is huge. They have a clear goal to double their production by 2027 through strategic expansion and acquisitions. What's impressive is their operational discipline. They consistently hit their production targets, which builds trust with investors. In fact, institutional investor Stars Ohio recently bought a significant number of shares, which is a strong vote of confidence. Now, their 2024 performance did see a dip because of lower oil prices, with earnings per share falling. But even then, they still beat Wall Street's estimates for 4 consecutive quarters. With strong financial discipline and a clear long-term growth plan, VAALCO is setting itself up for a powerful 2025. Analysts see an upside of over 135% for this undervalued international energy powerhouse. Let's shift gears from oil to electricity with our third pick. Pioneer Power Solutions, ticker PPSI. This company is trading at around $4.30 and is diving headfirst into the future of energy. Pioneer Power manufactures electrical equipment and, more excitingly, mobile EV charging solutions. They recently made headlines by securing a $725,000 contract with the city of Long Beach for their eBoost mobile chargers. This isn't just about public charging stations. They are expanding into mobile charging for commercial fleets, a rapidly growing segment of the EV infrastructure market. Their financial growth is electrifying. Revenue shot up 150% year over year to $8.4 million. Their gross profit hit $1.3 million, and for the first time, they achieved positive operating income. Yes, their cash on hand dropped, but that's because they're reinvesting heavily in new projects. Exactly what you want to see from a company in a high-growth phase. Over the past 5 years, PPSI has already outperformed the market by 168%. With analysts predicting a potential upside of over 140%, Pioneer Power is a small but mighty player, perfectly positioned to scale its technology in the EV revolution. Our fourth and final stock takes us into the world of biotechnology. Meet Protalix BioTherapeutics, ticker PLX, currently priced around $2.34. This New Jersey-based biotech has a unique edge. its Protalix platform, which uses plant-based cells to develop proteins for new drugs. They focus on rare diseases, a smart strategy because it often means less competition and higher profit potential. They already have an approved product on the market called Elaliso for Gaucher disease, which is sold in multiple countries. But the future looks even brighter, with a pipeline that includes PRX-115, PRX-119, and alidornase alpha. Here, some massive vote of confidence. Goldman Sachs recently increased its stake in the company by nearly 500%. That's a powerful signal. Financially, Protalix is turning a corner. Revenue is up 16% year-over-year, and they just posted a positive net income of $164,000, a huge improvement from a $2.2 million loss last year. With over $33 million in cash, they have the liquidity to fund their research. It's incredibly rare to find a profitable penny biotech with a solid pipeline, but Protalix is one of them. With an incredible analyst upside target of over 570%, this could be a major breakout stock if their upcoming clinical trials are successful. So, let's recap what we've covered. We have 4 distinct companies, all trading under $5, but each showing real, tangible progress. We have Ring Energy, the efficient US oil producer cutting costs and boosting cash flow. We have VAALCO Energy, the disciplined international operator with a plan to double production. There's Pioneer Power Solutions, an innovator in the booming EV charging space that's starting to scale. And finally, Protalix BioTherapeutics, a profitable biotech with a unique platform and massive institutional backing. The common thread here is that all 4 are undervalued relative to their fundamentals. They're improving their financials, expanding strategically, and have the potential for huge percentage gains. Investing in penny stocks is a high-risk, high-reward game. It demands research, patience, and a long-term mindset. You have to focus on the fundamentals, not the hype. The biggest lesson is that the best opportunities often hide where no one is looking. True investing success often comes from identifying value early and holding on through the ups and downs. These 4 companies prove that small-cap potential is alive and well as we head into 2025. Thanks for watching. If you found this video helpful, please hit that like button and subscribe for more deep dives into the market. See you next time!